and welcome to another edition of Capital Market live on Channels Television, where markets speak, and we bring you the inside edge as we break down what's driving stocks, bonds, and investor sentiment. Let's get into the numbers behind the noise, and we begin with markets outside Nigeria. We're seeing Europe stocks listed closed broadly higher on Friday as investors assess the latest trade policy announcement out of the U.S. White House, and the stocks Europe 600 healthcare index saw a rocky trade session before closing flat. However, this didn't stop the regional indexes from finishing Friday's session in positive territory. We see the FTSE 100 up 0.87%, DAX also up 0.77%, and the CAC 40 in France up nearly 1% there. Now let's look to Asia and see how the markets performed at the close of business on Friday. We see the shares of pharmaceutical companies fell on Friday after U.S. President Donald Trump announced fresh tariffs on furniture, heavy trucks, and pharmaceutical products. Now the Nikkei in Japan was down. We say it's 0.87%. Shanghai in mainland China, we saw that lower 0.65%, and the Hang Seng in China also more than 1.3% down. Now, looking at other markets now, we see in the U.S. stocks climbed on Friday following the release of crucial inflation data, and the Dow Jones Industrial Average advanced 0.65% to close at 46,247 points. We see the NASDAQ also up 0.59%, and the S&P 500 also up 0.44% to 22,484 points. Now, on Friday's rally, snapped a three-day losing streak for the major indexes, but still, they all ended the week down. But let's come back to Nigeria and see what's happening in the over-the-counter securities exchange, which closed the week positive as the index rose 0.32% to 3,545 points, and we see market capitalization standing at 2.12 trillion naira. Market activity saw investors trade 7.02 million units worth over 300 million naira across 93 deals. Now, the gainers chart. Lagos Building Investment Company led the top three with a 9.77% uptick, followed by Double One PLC and Purple Real Estate Income. See that on the screen to close at 8 naira there. On the flip side, Geofluid shed 8.54%, Food Concept did 0.79%, and we see Geofluid dipping there. So sell pressure taking it to top losers chart there, 8.54% to close at 4 naira 7 kobo. Meanwhile, the most traded stocks were Okitipupa, All Palm, Geofluids, and Double One PLC, as I mentioned, sell pressure taking place there. Now let's look at the big guy, the NGX. Closed the market, fortunately, in positive territory, with all share index rising 0.2% to 142,133 points there. We see the market cap rising 0.24% to close at 89.96 trillion naira there. Activity was upbeat. Investors traded 7.68 billion shares worth 494 billion naira across 116 deals there. Across the sectors, it was mixed trading. Banking stocks gained. We saw consumers rose. Industrial goods added also in positive territory. However, insurance, we see that slipping nearly 1%, and oil and gas also down, tumbling 1.62%. Now, among the top gainers, we saw Thomas Wyatt surging 22.68%, see that to close at 3 naira 30 kobo for the week. Secure Electronic Technology also climbed 21.33%, see that to close at 91 naira. And we see Mikio Industries jumping 20.83% to close at 26 naira 10 kobo. On the losers chart, Wema Bank shed 12.41%, Fidelity Bank fell 11.08%. And we see Eternal PLC, oil and gas, dropping 10% there for the week. Meanwhile, the most traded stocks for the week were Unity Bank. We know that story about Unity Bank, Amcon selling most of it to Providus. And then Aradel Holdings and Consolidated Hallmark Insurance made the top three for the most traded stocks for the week. But still, what happened in the week? This week, we saw major economic shifts. We saw the Monetary Policy Committee of the MPC, of the Central Bank of Nigeria, cutting benchmark interest rates by 50 basis points to 27%, and the committee also reduced the cash reserve ratio, that's the CRR for commercial banks, to 45%, while introducing, very interestingly, a 75% CRR on non-TSA funds as a treasury single account. Now, in addition, the MPC adjusted the asymmetric corridor around the monetary policy rate to 250 plus 250 and minus 250 basis points, and these measures are aimed to strengthen monetary policy effectiveness and support financial system stability. And the CBN governor, Mr. Olaime Cardoso, says about 14 banks in the country have already met the new regulatory capital requirements, underscoring progress in the banking sector's resilience. Let's take a listen.
The MPC expressed satisfaction with the prevailing macroeconomic stability, evidenced by the improvements in several indicators. These include the sustained disinflation, improved output growth, stable exchange rate, and robust external reserves. It particularly noted the increased momentum of disinflation in August 2025, being the highest in the past 5 months. Members also acknowledged the significant progress in the ongoing bank recapitalization exercise, as 14 banks have fully met the new capital requirement.
And now the CBN's decision to cut interest rates marks evidently a shift from years of tight policy. But this has sparked some concerns whether the Naira will remain stable in the near term. Let's take a listen to the CBN's Bank Director of Monetary Policy, Dr. Victor Obo, who was on our Business Incorporated program on Wednesday.
Now, the premium between the BDC and the official NFM is almost zero. It's very low too, which tells you that this stability in the exchange rate market, window is sustainable. Much more to that is the robust external reserve position that we have that is able, to be able to defend in case of any shock. So all this provide the comfort that the slight increase in NPR is not likely to see or lead to any depreciation in the value of the local currency, the Naira.
Now, to help us make sense of this and what it means for investors, we have with us in the studio Mr. Mukhtar Mohammed. He's the CEO of Finance with Mukhtar. Good to have you join us this evening. It's always great to have you, though.
Thank you, Will. My pleasure.
So I just want to let's create context. Now, coming from a background of, inflation, high inflation we saw in August last year, 2024, we had inflation about 31%, and currently, we've had like 5 months of decline, currently at about 20.12% for inflation. Do you think the CBN governor or the CBN MPC cut the interest rate too soon, or is it a well-awaited, or it's the right time to cut?
I mean, it's well-awaited. Whether it's the right time to cut, that's another thing altogether. For me, it's well-awaited, but I personally didn't think they would cut it at this monetary policy meeting. I thought they might cut it, but I thought maybe towards the last monetary policy committee meeting for the year, they might cut rate. Because again, like you said, even if you have 5 consecutive months of downward inflationary trend, definitely that means you are beginning to enjoy a little bit of stability in some of those volatile sectors or volatile indices like FX, exchange rate. Inflation is one of them. So definitely, I thought they would cut rate, but they've been very conservative. So I thought, maybe we'll see, they watch and see again before they cut rate. But again, like you're aware, rate cut is now normal. Ghana cut rate, Angola cut rate, the US cut rate. So I think it was just natural where you see inflation coming down. But again, our inflation, is it inflation coming down or rebasing helping inflation coming down? That's another thing we have to look at, because again, if you look at the MBS report, I'm sure we'll talk about it, it's all about rebasing. If you look at the inflationary report, it's all about rebasing. So since rebasing came in, we saw inflation move from a high of about 34% to 24%, just because of rebasing. So rebasing in a sense have helped move our inflation, but rebasing itself will not keep our inflation low. A lot of inflationary variables are still there, the pressures are still there. Just this evening, we started seeing marketers saying they may increase fuel price because of the issue between Dangote, now saying marketers should have to buy fuel through dollar. That could put a spanner on the work that we've done, especially when you look at it's a way of controlling the demand for FX, and also we'll be able to stabilize the petroleum market, which normally in Nigeria is a petrol economy. So once that side sniff, every other side sniff. So for me, I think it was fragile, but again, it was expected one point in time. 5 years of either steadying the rate or hiking the rate, I think it's the right time we have a breather.
Definitely, but if the markets were to take this as a gamble, possibly say maybe the CBN just decided to, it's a fluke, let's just cut the rates because other countries are cutting, or maybe because it's been 5 years coming, let's just give one rate cut. Do you see any increased volatility in the market? Do you expect markets to go volatile?
In spite of that, what changes in the market? I mean, we didn't see those drastic change in the market. The market was just normal. Maybe it has been priced in already, maybe. But again, despite the rate cut, what would cause volatility has always been the exchange rate. We've seen stability in that space. As of today, I think it was about 1,480 even in the black market. So, I mean, I'm sorry, they say we should call it black market again, parallel market.
Parallel market.
1,480. So definitely, you could also say that we've seen relatively stability in that space. So yeah, I think volatility is largely driven by the effects. I believe it has been pricing. Will attract foreign investors because the U.S. would have seen a hike in rates in Nigeria, would have moved a lot of their portfolio down to Nigeria. But I'll tell you something. If you look at even our inflation, based on our rate cut, based on our return, we are still very, very good in terms of what we're doing, almost fixed income of 15%. So definitely, we'll still see them come in their own rate. There's about roughly about 5%. I mean, if you do 5% in America, that is huge. So we'll see those people coming to the emerging market, especially now that we've seen that two-way exchange system. So definitely, the volatility should be largely driven by FX. But again, like I said, we have stability there. Don't see any, especially in the fixed income space. Remember, once there's a rate cut, what suffers the fixed income space? So that's what I'm particular about it. But because of the kind of return, in spite of the rate cut, I still see that space being bullish, especially for foreign portfolio investors.
Definitely. So you expect foreign portfolio investors to still keep bringing in their monies, and so we should expect more from that. But if this rate cut, don't you think does it create like a divergence between CBN policy intent to cut inflation, bring inflation down, and the government's borrowing needs?
When you talk about the government borrowing need, I like saying that where we are today was largely driven by monetary policy tools. I mean, if you look at exchange rate, you look at inflation. But if you look at government, physical side, the government policy, you've seen a lot of government policy seems to sometimes put a span on the work of the CBN. Remember the 4% FOB, that has been suspended. That also, we still have, I just talk about now the Naira to dollar quote in both have been suspended. That also for inflation. So have we seen any intervention that is to the real sector whereby we see positivity in that space? We have not seen it. We've not seen that yet. So I don't think the physical side have done anything fantastic, sincerely. What we are enjoying has always been the monetary side, pulling the stream, trying to contain inflation, trying to bring price stability. The only difference between this present CBN management team and the previous one is that they are not dabbling into what they are not supposed to dabble into, rice farming or wheat farming, or trying to revive the moribund textile. That's the only thing they have done. But in terms of their monetary policy, I think they have been top notch. You have to give it to them. People will say, okay, they were the one that caused it to exchange rate, but we look back at it. If you see exchange rate at 1,800 at a point, and to get to 1,480 within a year, for me, that is very huge. So the physicals have been doing that, but I don't think government have done anything fantastic except in the area of infrastructure that we are seeing, and that is not going to be a short-time effect you see on the market. But most short-time effect that will definitely help, I think they are a long way from it.
Definitely, because our economy seems to be largely hinged on the FX right now, the volatility in the FX. Looking at, listen, you heard what the CBN Director for Monetary Policy said about stability in the Naira, that he doesn't see any volatility coming there, that the Naira will still be stable against the dollar in the coming days. But we saw that report from Citigroup saying that if the CBN continues the rate cut, we'll probably foresee Naira closing up or down against the dollar at probably the 1,600 levels in 2026. Do you agree with this forecast?
It's a forecast. We've seen more forecasts, and we've not seen those forecasts see the light of day. I think it's a forecast, and will that happen? Like I've just told you, if what we are hearing is anything to go by, if we start paying for refined petroleum product through FX, the marketers have to source for FX now, that will put pressure on the exchange rate. The gain that we've seen, that means demand for FX will be high, then supply definitely. So the reserve that we are seeing today at 43 billion might just be depleted. So for Toyota to maintain that, maybe they have to keep on intervening. That's what I see, because that's the physical side. Because if they don't find a solution to it, which is supposed to take effect from tomorrow, we've already seen that panic already, even within Lagos, where you see some people rushing to buy fuel at that current rate. So that could put a spine afterward. Rate cut in itself, I mean, the Citigroup might be saying that we will not attract investors to bring in FX, that will cause volatility because we have rate cuts in the developed economy like the United States, Europe, and others. But like I've just said, if you look at our returns is still very high. Okay. Remember, our Eurobond was high, was the best in terms of return. Okay. And also, so currently our fixed income space is still giving better return. And they have low inflation. And again, that stability in the exchange rate will drive a lot of them into our markets.
Hold that thought on the yields in the fixed income space. We will take a quick break now. We'll be back after the break. Capital Market continues. Don't go anywhere. Welcome back. If you're just joining us, you're watching Capital Market live on Channels Television. I am Will Ibang, and we have in the studio Mr. Mukhtar Mohammed. Is the CEO of Finance with Mukhtar. He's been discussing the recent MPC decision by the CBN MPC to cut interest rates by 50 basis points, and we're looking at the impact, the implications for Nigeria's economy and the market. Mr. Mukhtar, it's good to still have you in the studio.
Thank
but
you.
You were talking about the yields in the fixed income space, and I was kind of looking at it interestingly, thinking about it, that say if the CBN continues to cut rates, don't we see that inverse relationship with the bond market? Yields will probably drop. What do you see market players, especially now foreign portfolio investors, or the foreign FX inflows we're expecting, if they don't materialize, would we see that weakening in the Naira?
Of course, that is certain. If you look at remittance again, and what has come in has also helped to stabilize the FX rate. So if we don't see that flow, definitely, that means the CBN may have to intervene in the market, and in their intervention, there will be a reduction in the reserve, and that could see that volatility return. But really, again, you have to look at our oil product output also has improved. So we keep getting that output at the rate it is, we keep improving it. Though our budget, we are still far away from our budget benchmark of 2.03 billion barrels per day, but at least we are making 1.68, sometime at the point 1.7. Including condensers and others. So I still think that if we maintain as we then, please don't forget, also the non-oil sector is also doing well in bringing FX into the economy, even if it's not in terms of value like the oil sector. So we seem to have a little bit of breather somewhere where I'm now not so much of a monotonous economy whereby we just depend solely on oil. But like I said again, yes, continuous rate cut. But if you look at history, I don't expect that the next CBN monetary committee meeting, you see on that rate cut, you see on that rate cut, you see on that rate cut. Because what I've seen in Nigerians is that in monetary policy over the years is that we tend to be at a point for a very long time until something now has to tick us towards moving. Like I said, what has moved us now is rebasing. But again, rebasing in itself, does that keep interest does not keep interest rate? Does that deal with inflation? Is that able to drive in effects into your market? Yes, driving effects into your market because you are looking at new areas that have been discovered, telling people we have the real estate sector, we have the mining sector, we have the fintech sector. Would that drive big player globally to come to your market? If that does happen, then that means you see a lot of effects coming into the market. But if that do not happen, then we have a very challenging time.
Let's look at the markets now, equities. How does this impact the markets, especially for the banking sector, which a lot of investors have eyes on banking sector? We saw that 75% introduction for non-TSAs, for CRR. How do you see this impacting liquidity for banks and also return for banks, especially in terms of credit lending to the real economy?
Well, you saw that reduction. I think all the monetary committee meeting, I've never heard that TSA 75%, and I think that was a smart one. But again, you look at it again, then cash reserve ratio was brought down again from by
commercial banks to 45%,
45%.
For
so we have another 5%. I'm sure. Don't forget again, the bank are watch with liquidity. If you look at some of the results that come, their shareholders from are still in the trillions. Again, that is one. Then again, remember they are raising capital. So we still have that inflow of liquidity into that sector. But whether they want to borrow to the real sector, that's another thing all entirely. If you look at this half-year results of virtually all the banks, you realize that there's a cut in terms of lending to the real sector, in terms of they're trying to manage their risks because of the microeconomic issue. A lot of the bank's profit also was gotten through treasury bills, bonds, fixed income space. So that could also help affect their bottom line. But if they want to lend to the real sector, that will, for me, I don't see that. For now, I think Nigerian bank, what you give to them, they're very ingenious in terms of you just think, oh, this is what's going to happen. They come up with a shocker. So with that, I think, but again, I get what you are saying. Will that money really go to the real sector if you have increased, reduced cash reserve ratio, and now again you have reduced the TSA? And that TSA was funny because I never saw it coming. I thought the TSA normally was supposed to be with the Central Bank of Nigeria. But I was surprised that some banks still keep TSA. So we've never heard about TSA before until this current administration coming. So that again is an area that could have also been messing up with what the monetary policy is doing, because if you were doing cash reserve ratio and then you have TSA that they could lend over 100%, that should have been a challenge that has been for inflation, if really inflation is driven by liquidity in the system. But you and I know that liquidity in this system does not drive down inflation or hike inflation, because the most vibrant sector in the Nigerian economy is the informal sector, and that sector is largely driven by liquidity. When you starve that sector of liquidity, it's more or less like starving air out of the Nigerian economy.
Very interesting point you put out there. But let's look at we're talking about the economy now. We saw the GDP print, for the Q2 second quarter 2025 coming in at 4.2%, the fastest since 2021. Very phenomenal. But you said based on the rebasing is still probably at play here. How do you see this impacting, say, equities? Do we see a re-rating of some equity sector now, maybe some rebalancing of some sectors? Since you mentioned real sector, mining, we see some companies start benefiting from this or expanding as a result of this?
You look at mining. How many mining companies do you have in the equity market? Maybe Japan Go. So that's not ordinary. Should be a game changer for them. Manufacturing sector, we've seen that game changer already. Due to, if you look at some of their results, due to stability in the FX market, revaluation really took them to the cleaner. But a lot of them are coming out of it. Results have been positive. You look at the telecom sector. That's when you talk about the fintech sector. Definitely that have been positive. You have to look at where MTN was at the beginning of the year and where they are today. So that is very, very positive. You also know that the non-oil sector, like you said, most of the growth that was seen in that sector was likely driven by the financial sector. And you know why? Because of these funds that the banks are attracting in terms of recapitalization. So definitely, when you look at the GDP, then you could say there are some interesting sector to watch out for. The financial sectors, of course, the manufacturing sector, the mining sector, the oil and gas sector also. Don't forget, for the first time, adding about 20% to the GDP. Before now, we didn't see that. So definitely, that means the oil and gas sector is one positive side we will see. But like I said, did you really see those impacts the week this MPC meeting? Or did you see that impact? You see that Japogo was on bid, or Aradel was on bid, or yeah, we saw that at the first day. I think we saw Oando trying to move up again. The manufacturing sector, the consumer sector, they were just still flat. The financial sector, of course, you know, there was that recovery that had been ongoing after that results. That some of them was very impressive. Yeah, I mean, the most impressive result of the Tier 1 bank that has come out thus far. You look at UBA, you look at Zenith Bank, you look at GTCO, was Zenith Bank. And since that result have come, you've seen that stock move from 64 to 60, about 69 and 70. So definitely you could see that. But again, will you say that was driven by what the CBN did? Like I said, most investors are pricing a lot of this, and they're pricing dividend, they're pricing MPC meetings 2 weeks. So we always do that pricing in before it comes. So, and then we now wait for the next trigger. Then what's the next trigger? The next result, the earning results, the third quarter results. So that's what we might just wait for to trigger any change. Yes, the other sector from now till October ending, we expect the half-year result to come in. That could, like the consumer sector, the manufacturing sector, that could also be a game changer. But as it stands now, it has been pricing. So what we do is now wait and see.
Speaking of third quarter, we've gotten to probably the end of the third quarter of September. September marks the end of the third quarter. We are almost at the end. Next week, we're going to be entering October. What is your outlook for the fourth quarter for the markets, equities, fixed income, possibly Forex, if you have anything to throw in there?
Okay. Fixed income, I think we'll still have that stability. I don't expect the CBN is meeting sometime in November again. That will be the last monetary policy committee meeting for the year. So definitely looking at the event as an event unfold, I think we'll still have that stability in terms of, I don't see those rates coming down to 10 or a single digit yet in the fixed income space. For the FX market, yeah, stability has come in. But like I said, with the news that we had, that might just be a game changer there in terms of FX inflow. Hopefully that will be addressed. Why that suspension now by Dangote? Why is it that NNPC started collecting FX for them for crude? That's one. For the stock market, the trigger will come in when those half-year result comes in, and third quarter results start coming in, and hopefully we could see something going forward. But I'm positive of the financial sector because of their recapitalization, insurance sector, consumer good manufacturing sector. Don't take your eyes off those space. They are still very interesting space.
Very, very interesting. Thank you so much, Mr. Mukhtar Mohammed. We've run out of time. We'll have time to talk about it some other time. But thank you. Mukhtar Mohammed is the CEO of Finance with Mukhtar. Thank you so much for joining us on Capital Market.
My pleasure, Will.
And always remember, that's the edition of Capital Market for today. Remember, whether the markets are bullish or bearish, knowledge is always your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch this again on YouTube. I am Will Ibong. Thanks for watching.